Hello, this is the TradeSite U.S. Stocks and Futures Market Preview and Domestic Economic Data Roadmap for the week beginning Monday, January 30th, ending Friday, the 3rd of February, 2017. Hope you had a good trading week. This is the end of January. On Tuesday, we're just wrapped up core earnings season for the fourth quarter, and got a look at gross domestic product for the fourth quarter, the first advanced looks, all that stuff's out of the way. Here's a look at the futures, and you can see we got a little pop up this week to new highs. Talk about what all that means, but let's go through the major indices first. So crude oil down 60 cents to 53.17. Gold down $1.40 to 111 or to 1,188.40. Here's a look at the S&P cash index, which lost 2 points for the session. Now, again, we got all the way up to that risk line, and this is where we've stalled out so far, the pink risk line from the 13 sell signal, and we now have 9 bars up. So even if we do head higher, we're going to run into a second sell signal back to back. Second ones, when they happen like that, it's pretty rare. Almost always cause the reversal. NDX, NASDAQ 100 gained 11 points, gapped up 15 and gained 11, so we lost back 4. You'll see that on the intraday chart. SOX closes up 11.94. Biotech's up 29.80. The VIX loses 5 cents. New closing low on the VIX at 10.58. Absolutely amazing. Nothing positive about that. But look what it did do. This is what's interesting. We had a 13 buy signal on the VIX about 3 weeks ago. The pink risk line is the support level of that buy signal. The low of the day is basically the pink line. So we hit the risk level. Trend closes at 1.07. Nothing major there. NASDAQ volume 1.5 billion. Horrible. Worse than Tuesday, Wednesday, and Thursday. Not worse than Monday. Advanced decline ratio, negative 164 on the NASDAQ, which is close to even, but negative 429 in the New York. A few more stocks red than green. Google loses 12 points after earnings. Was down a lot more than that in the aftermarket yesterday, then opened even, then went down. Apple literally up a penny. Amazon down 3.39, but holding near highs. Netflix up $3.49. Tesla gains 44 cents, also holding near highs. The bonds rebound a little bit, up 43 cents. Dow Jones loses back 7. Remember, we got a 13 sell signal on the Dow Jones now as of Thursday. Haven't done anything yet, but be aware of that. The last 13 buy signal was right before the market launched in November. All right, let's look at the intraday action during the week. So this is 10-minute candles. You can see the whole week here. ES opened flat, went lower, came back to close around even. Then Tuesday, small gap up that filled. Then this is the day that's weird. Just no volume really, but just after the first hour and a half, just started moving up. Steady climb on the ES. And then 13 sell signal on the 10-minute is the high. Pulled back right at the end of the day. Wednesday, the gap up and go. And then the push higher. A little bit, but again, a flatter session. The biggest range of the week was on Tuesday, and the volume wasn't that exciting. Thursday, look how flat Thursday and Friday are, and Wednesday, really. You throw them all in, I mean, Wednesday, Thursday, and Friday, you're looking at 12 points of range on the S&P for the whole 3 days. I mean, we trade more than that on one day on average. Absolutely horrible. NASDAQ side, not much different. Look how flat Thursday, Friday are. Again, Tuesday was the bigger ranged day. All right. So, what do we have this week? Well, first of all, Tuesday's the end of month, so it might be a little slow. Statements printing. It's end of month, not end of quarter, so it doesn't necessarily mean a ton. By the way, after we get done with this, we're going to go back to the daily charts. So Monday, we've got personal income and spending and PCE prices an hour before the bell. There's a lot of data this week. Then 30 minutes into the market, we've got pending home sales. Tuesday, employment cost index an hour before, the home price index 30 minutes before, Chicago PMI 15 minutes in, consumer confidence 30 minutes in. These are big, important numbers right now, actually, to start the year off. These will be important. Both of those will be important numbers. The MBA mortgage applications index and purchase index is on Wednesday, and then the ADP employment change is on Wednesday, along with ISM index, construction spending, crude oil inventories, and at 2 p.m., the Fed rate announcement. So we've got a two-day Fed meeting this week, Tuesday and Wednesday. So the end of the month carrying into Friday to February 1st on Wednesday is the Fed meeting. Auto and truck sales in the afternoon. Thursday, Challenger job cuts, initial and continuing claims. That's the weekly number. Productivity, unit labor costs. Then an hour in, natty gas inventories. Friday, non-farm payrolls data, the unemployment rate. Factory orders 30 minutes into the market, and ISM services also 30 minutes. There's a lot of data this week, including that Fed meeting. I don't know that I expect them to do anything on the Fed, but in terms of a rate hike, but certainly the language will be interesting going forward. So I think this is an opportunity finally for a little bit of movement. I don't know that Tuesday will be the day because it's the day of the Fed meeting before the announcement, and it's the end of the month. So I think Wednesday, Thursday, though, with all the data that's coming out the back end of this week, hopefully we finally get some movement. The problem is, the old saying is you never short a dull market. Well, we have a dull market. Definition of most days, the first hour and a half here has been really dull, and then you just kind of drift up because there's no volume in the market right now. And until we get some volume back and some volatility back, there's really not much else to say. Let's take a quick look. I did want to show you guys something on the daily chart. Now I can't remember what it was. Okay, I forgot. So, again, I'm not saying, that things have to get exciting this next week, but at some point in time here, we need to shake loose of what we've been doing. And there's certainly a lot more lined up for a roll than there is for upward movement. But until you actually get the excitement, the volume in, until there's something that kind of shakes people, as they say, never short a dull market. So I wouldn't get too heavy. I'm still short Goldman Sachs, and that's working. Matter of fact, this thing's a mess in my opinion. This chart looks horrible. It should get back to 210. So I'm short from 244 in the form of options, and looking at the Dow Jones, the diamonds as a potential short as well. I'd like to see one day down first, and then maybe get into that. Charts as usual brought to you by eSignal. If you've not yet taken a trial of our services, feel free to do so. We will help you out for a couple weeks. Have a great trading week.